Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for December 21st, 2016. We're winding down, counting down the days here till we head into the Christmas holiday here in the US. We have a market holiday on Monday. We do have crude oil inventories here later on today. First, looking at the ES and the daily time frame here, we're still stuck in the very narrow range. We talked about 2070 to 73 yesterday. We talked about prices between 40 and 43 down here, and any fading off the edges would be done at these extremes here, right? And right now we're still inside the range. At some point, the expectation is perhaps for this thing to continue pushing higher, especially any pullback likely to be a buying opportunity into 2040, into 2014. We'll just have to continue to watch. But this zone right here, this is the high. The previous week's high is 2273s. Watch that area. If price comes into here and cannot find acceptance beyond that high, you likely rotate back down to the bottom of the range. But overall, the expectation is for this thing to continue to quietly melt higher, especially as long as price remains above that 2214. So right now, we'll continue to watch the edges here. Not a whole lot to really play off of at the moment. And if we look at the intraday time frame, here it is. You can see not a whole lot of action here overnight. We've got about, let's see, 4 points of range. So not a whole lot of range. 22% of ADR for the day. This is the current range for the day, 70 here. You got 62 down here. So if price were to come down here and reach below these lows, it might be a fade back up. Same thing up here, but right now you have to wait and be patient for the edges to be engaged. All right, let's take a look here at the crude oil chart. Here's crude oil. This right here is the higher time frame. And one thing we notice about crude here is that it continues to hold above 52s. 52 has been that big level we talked about before. We see nothing but rejection time and time again. And then we saw price gap up and run and reach as high as the 54.50s. Eventually it came back down, hit 50, and then now it's back up. So the price is below 52s, which is basically right here, bought up big time, and prices continue to hold at these highs. This is a nice impulse range from this high to this low with the midpoint here. So we got to continue to watch that range as well. But overall, as I mentioned before, the fact that prices continue to hold above 52s for any duration of time implies that we could see a squeeze and a continuation toward these next upside targets. We have 55.50, 57.91, and 59.5 as the next major targets to reach. And then the opposite edge, as we've talked about before, comes into play at 62. But we'll see how that plays out heading into the first quarter of 2017. Right now, we're likely to kind of stay more engaged in this range, and then at some point, we could begin to see the squeeze come out. On an intraday basis, here's the intraday. One thing that you're seeing here is that price went right into the previous high, 53.77, and rejected. Came back to the previous close, held, and then offered. So right now, the implication is bears have control of 53.51. They want to defend it for a shot at dropping this thing back toward 53.10 or 52.96. Any push to this edge could be an opportunity to bring it back up toward value at 53.60. So right now, a little back and forth, a little rejection here, a little offered off the close. That would tend to lead to prices going to the opposite end of the range. Right now, 53.10 is very important. So should price come back to this zone, it could be an opportunity to bring it back up. All right, let's take a look now at the gold futures chart. Not a whole lot to speak of in gold either right now. We've been trending steadily downward. The previous session here is when we had our flush and a stops run day. But we really didn't continue here so far this morning. So this is what I mean. Here's the break of the prior low right there, and then price pushes down. You can see that dot, that's the median price, and it's right at or beyond that low. So there's a stop run day here, but we didn't continue. We didn't hold at the lows. Instead, we bounced back up, and now we have an inside day right here hugging the previous week's close. So again, very narrow range, likely to see a little bit of trading action here, but as long as price remains below 1145s, this thing is still pointing downward. And if this thing eventually breaks this range to the downside, 1125, you have more downside targets to go, with the big one here, as we mentioned before, 1092.70. All right, let's take a look at the NQ. Here's the NQ holding at highs right now. This one also has a very clear trading range. We talked about 48 rather 49.10 to 4900 as a key zone of support, and then up here we've been talking about 49.65 to 49.70 as a key area of resistance. You can see the market has been within those boundaries, keeping it very nice, nicely offered at the highs, nicely bid off the lows, but we do have an upward trending slope to this thing, so that usually implies that at some point the stops will come out and this thing will continue to push higher. Remember, if this thing does push higher, 5,000 is just around the corner, and 50-40 half is a major upside target. So above 49.70, 49.80 will squeeze to 50-40. Any failure to hold above that zone could lead to a pullback here, perhaps in the 48.80, maybe even lower. But again, any pullbacks so far have been buying opportunities in the current market. But we got to watch this range very closely. On an intraday basis, again, not a whole lot of activity this morning. NQ trading just 18% of ADR with a range of under 10 points for the day. Not a whole lot of meat on the bone right now. You have 49.60 up here. So again, if price pushes up to 60 or 65, 70, there could be some quick rejection back toward 49.36. If prices right now, as they currently stand, they're below the previous session's close, they're being defended here, that would imply at least a little bit of a push lower. But down here into the previous session's low and value on a 5-day basis, this also S3, this could be an opportunity to buy low and bring it back to value. So again, we're just kind of pushing water around in the bathtub. You got to be very careful. You got to be disciplined about your trade location, about your risk management, and also about the opportunities as we head into a lower volume and lower volatility state in the market. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.